guys, welcome back to my channel. It is Naomi here, and today we're going to be on the topic of the journey of wealth. We're going to dive into a hot topic that specifically talks about the assets that makes the rich richer. So buckle up as we explore these golden tickets to prosperity. The rich often have a different game plan when it comes to growing their wealth. They invest in assets that appreciate over time, generate income, or both. And today I have 20 examples for you guys. The first one is real estate. Owning property can lead to rental income and value appreciation. Real estate has long been a cornerstone of wealth creation for the affluent, offering a variety of ways to accumulate and increase riches. And here is a simple breakdown of how the rich use real estate to grow their wealth and the different types of real estate investments available. So let's go ahead and dive in, you guys, on how the rich use real estate to make more money. Number one is appreciation. Wealthy individuals often invest in properties that are likely to increase in value over time. And this can be due to market trends, development in the area, or improvements made to the property itself. Number two is rental income. Owning properties and renting them out provide a steady stream of passive income. The rich use this rental revenue to cover the property's expenses and generate profit. Number three is leverage. By using borrowed capital to increase the potential return of an investment, the rich can control a large asset with a relatively small amount of their own money, amplifying their earning potential. Number four is tax benefits. Real estate offers various tax advantages such as deductions for mortgage interest, property taxes, operational expenses, and depreciation. Number five is diversification. Real estate is often used as a way to diversify an investment portfolio, which can reduce risk and stabilize returns. The next topic we're going to talk about are the different types of real estate investments. Number one, we have residential properties, and these include single-family homes, apartments, condos, and townhouses where people live. Investors can make money through appreciation, rental income, or both. Number two is commercial real estate. This category includes office buildings, retail spaces, warehouses, and shopping centers. And these properties are typically leased to businesses and offer higher rental income potential. Number three is industrial real estate. These properties are used for manufacturing, production, storage, or distribution. They often have long-term leases and can provide stable income. The fourth one is land. Investing in raw land can be lucrative if the land is later developed or sold at a higher price due to increased demand or zoning changes. Number five is real estate investment trusts. It allows investors to put money into a diversified portfolio of real estate assets, and they are traded like stocks and can provide dividend income. Number six is crowdfunding. Real estate crowdfunding platforms enable investors to pull their money together to invest in larger projects they might not be able to afford individually. Number seven is fix and flips. Investors buy properties in need of repair, renovate them, and sell them for a profit. This strategy requires a good understanding of renovation costs in the real estate market. Moving on to number eight, which are short-term rentals. And these are properties rented out for a short period of time, such as vacation homes. They can generate higher rental income per day compared to long-term rentals. Understanding these strategies and investment types can provide insight into how the rich use real estate to build wealth. For anyone looking to follow in their footsteps, it's important to conduct thorough research, understand the risk, and consider seeking advice from financial experts. Now we're going to talk about stocks, which are shares in companies that can increase in value and pay dividends. The rich have a knack for using the stock market to their advantage, and there are several key strategies they employ to increase their wealth through stocks. So here's a simplified explanation of these methods. Number one is long-term growth. Wealthy investors often focus on long-term growth by investing in well-established companies that have the potential for steady appreciation over time. Number two is dividends. Stocks that pay dividends provide a regular income stream. The rich invest these dividends to buy more shares, benefiting from the compounding over time. Number three is value investing. They buy stocks that appear undervalued compared to their intrinsic worth, expecting them to appreciate to their true value over time. Number four is stock rentals. Some wealthy investors engage in stock rentals where they earn income by lending their stocks to other traders or institutions. Number five is leverage. Using borrowed money to invest in stocks can amplify returns. This is a riskier strategy, but it can lead to significant gains if it's done wisely. Number 6 is diversification. By spreading investments across various sectors and asset classes, the rich mitigate risk and increase the chances of hitting on high-performing stocks. Moving on to number 7, which is market timing. Some wealthy investors try to time the market, buying stocks when they're low and selling when they're high. This requires a deep understanding of market trends and is generally riskier. Number 8 is private equity and venture capital. Investing in private companies before they go public can lead to substantial gains if these companies become successful. By employing these strategies, the rich use the stock market not just as a place to invest, but as a tool for actively growing their wealth. It's important to note that these strategies involve varying levels of risk and require a solid understanding of the stock market. For those looking to emulate these methods, it's advisable to start small, do thorough research, and consider seeking advice from financial experts. And next, we're going to talk about bonds. Bonds are like loans to the government or companies that pay you back with interest. Bonds are a staple in the investment portfolios of the wealthy, serving as a tool for wealth preservation and accumulation. By strategically using bonds, the wealthy can enhance their financial security, ensure a diversified investment approach, and continue to grow their wealth in a controlled and steady manner. Bonds offer a blend of stability and income that is hard to match with other investment vehicles, making them a key component of the rich investment strategy. The next one is mutual funds, which is a mix of various investments managed by professionals. Then we have ETFs, which is similar to mutual funds, but they're traded like stocks. The next topic we're going to talk about is business ownership. Running a business can generate significant income and grow in value. Business ownership is a powerful engine for wealth creation, and the rich have mastered the art of leveraging businesses to expand their fortunes. And this is how they do it. Number 1 is reinvestment. Wealthy business owners often reinvest a significant portion of their profits back into their businesses. This reinvestment can fuel growth, fund innovation, and improve operational efficiencies, leading to increased value and higher profits. Number 2 is diversification. By owning businesses in different sectors or industries, the rich can diversify their income streams, reducing risk and capitalizing on various market opportunities. Number 3 is leverage. Using borrowed funds or retained earnings to expand business operations or acquire other companies can lead to exponential growth. This strategy, however, comes with increased risk. Number 4 is tax advantages. Businesses offer various tax benefits, such as deductions for business expenses, which can significantly reduce taxable income and increase net wealth. Number 5 is asset appreciation. Over time, the value of a well-managed business can appreciate, increasing the net worth of the owner when they decide to sell it or pass it on. Moving on to number 6, innovation. The rich often drive innovation within their companies, creating new products or services that can disrupt markets and create new revenue streams. Number 7 is economies of scale. As businesses grow, they can achieve economies of scale, reducing cost per unit and increasing profitability. Number 8 is strategic partnerships. Forming strategic partnerships or joint ventures can open up new markets and resources, contributing to wealth growth. Number 9 is brand building. A strong brand can be an invaluable asset, allowing for premium pricing and customer loyalty, which translates to higher profits. Lastly, we have global expansion. Expanding operations globally can tap into new customer bases and diversify against domestic market fluctuations. By employing these strategies, the rich use business ownership not just as a source of income, but as a dynamic tool for wealth multiplication and preservation. It's a testament to the power of entrepreneurship and strategic investment in one's own venture. Now we're going to move on to more assets that the rich use to build their own wealth. Number 1 is precious metals. So think of gold and silver. They have been wealth stores for centuries. Number 2, we have art and collectibles, which are items that can skyrocket in value. Next up, we have education. Investing in knowledge can lead to higher earning potential. Number 4 is patents and royalties. Owning rights to inventions or creative works can yield ongoing income. Next up is number 5, Private equity. Investments in private companies can lead to big payouts. Number 6 is venture capital. Funding startups can be risky, but overall very rewarding. Number 7 is land. Agriculture or commercial land can appreciate and provide rental income. Number 8 is cryptocurrencies. Digital currencies are a modern, albeit volatile, asset class. Next, we have real estate investment trust, which lets you invest in property without owning it directly. Number 9 is peer-to-peer lending, and this is loaning money to others and earning interest. Peer-to-peer, P2P, lending has emerged as a modern investment avenue that the wealthy use to diversify their portfolios and increase their wealth. The rich are attracted to P2P lending because it can offer higher returns compared to traditional fixed income investments. The interest rates on P2P loans are often more favorable, reflecting the higher risk associated with lending to the individuals or small businesses. The next one is diversification. By adding P2P loans to their investment mix, wealthy individuals can diversify their portfolios, which helps mitigate risk. If one investment underperforms, the others can balance it out. Then we have passive income. P2P lending can provide a passive income stream. Investors receive monthly payments that include both interest and principal, contributing to their overall wealth without active involvement. Next is direct control. Investors have the ability to choose which loans they want to fund based on their risk tolerance and investment criteria. This level of control is appealing to those who prefer a hands-on approach to their investments. Next up, we have annuities, which are insurance products that can provide a stable guaranteed income stream for life or a set period of time. This can be particularly appealing for the rich, who may want to ensure a certain lifestyle during retirement without worrying about market fluctuations. Now let's talk about tax deferral. The money invested in annuities grows tax deferred, and this means that the wealthy don't pay taxes on the investment gains until they withdraw the money, allowing the investment to grow more efficiently over time. Then we have hedge funds, pooled investments that aim to outperform the market. Next, we have commodities, which are physical goods like oil, wheat, and copper. And for the last thing, we have fine wine. Yes, even wine can be an investment. The rich use these assets as tools to build and maintain their wealth. They understand the power of compounding and the importance of diversification. By spreading their investments across different asset types, they can manage risk and capitalize on opportunities. Now it's your turn. Think about how you can incorporate some of these assets into your own wealth building strategy. Remember, it's not about having a lot of money to start, it's about starting and being consistent. And there you have it, folks, a simple breakdown of the assets that can help pave your way to financial success. Don't forget to like, comment, share, and subscribe. And if you haven't already, go ahead and check out my motivation station for a quick boost of inspiration. Keep thriving. Thank you guys so much for watching, and I will see you guys next time.